What is your thought about the fact that historically we're in for a really great period, but we mentioned there's a whole bunch of things going on right now?
Yeah, no, I think we should be looking forward to hopefully a strong end to the year. We've had economic news coming in a little bit better than expected. We got earnings report this quarter that are going to set the tone with Magnificent Seven. So if we can get some good earnings here, maybe that'll be enough to kind of push us into that Santa Claus rally towards the end of December.
But you still did a double take. I'm assuming you're getting calls from clients. The sentiment may be different than the historical precedent right now?
No, I don't think so. I think clients are actually pretty, yeah, well, they're pretty pleased by being disciplined and consistent throughout the year from last year into this year. They've been rewarded for that, and they do financial planning, so they kind of have an idea as to how this game is played. They know that something, stupid could happen, and we could see a sell-off somewhere down the line, but they don't play any guessing games. They don't try and time this.
All right. So they don't play guessing games, but there's some things that we definitely know. We know that bond yields are rising. We just hit it just a short time ago, highest level since July.
Yeah.
We know there is a lot of geopolitical tension just going on all around the world. At the same time, we know there's an election coming up that we just don't know the outcome to.
Sure.
When we're talking about all that, are there any moves that you're actually advising your clients to make just to kind of hedge or prepare for what could be some type of shift in economic policy, some type of shift in just investor sentiment overall?
Sure. So we typically don't make any moves relative to politics. If you look over the current administration.
A lot of people say that.
Sure, yeah, absolutely. And if you look over this administration and the previous administration, you had some really good years in the market, pretty good to stay put right there. But no, clients aren't making any big moves by the end of the year. Every time I come on here, though, we talk about bond yields and where they are. Kind of a full circle here when you look at the 10-year. So is this that opportunity again to take advantage of longer duration bonds? So I think that's still in play now, watching the 10-year back up at 4.3.
Is there a level that you think bond yields become an issue for the equity market, become an issue for investors that want to put their money into the equity market?
No, I think right now it's risk on, right? And I don't think there's a lot of room to the upside of yields at this time. But we're going to see how rate cuts continue to factor in by the end of the year and into next year. Are we going to see as much pressure to lower rates as we did in September?
You don't respond to politics, but of course we all respond to earnings reports. I mean, they move the market. This is pretty interesting. This is from FactSet. So if you look at the Mag 7, their earnings are supposed to increase 18% year over year. The rest of the S&P 493, 0.1%. So that just gives you a sense of the magnitude of this week. How are you playing this week? Are you expecting these Mag 7 companies and mega cap tech companies to beat? Are you expecting them to beat and raise? I mean, what are you seeing right now?
I would expect them to finish this year strong. I haven't seen really anything that would have me say they take a big step back in earnings. So that's what we're all looking to see. And I think it really does set the tone for what these final 2 months of the year are going to look like. If we get strong performance or strong earnings out of these companies, you're probably going to see that, 5.3% on average run? That's on average. I don't know if you're going to get that this year.